Hello friends, hi, welcome back. Today we are going to discuss about the price action strategies. Price action strategies help you to understand when to buy and when to sell the stock or particular index. And also we'll discuss about the market structure. Before we understand the price action, understanding market structure is very crucial. So what is this market structure? Market structure helps you to understand whether the market is in which of the following four phases. What are these four phases? Accumulation phase and also advancing phase, distribution phase and also declining phase. These four stages constitute of a market cycle. Okay, what we said, we discussed about accumulation, advancing, distribution and declining. So these four phases constitute of a market structure. So this occurs in a cycle, which means after accumulation, advancing after distribution after declining after accumulation zone, again it starts. So what is this accumulation? Accumulation basically comes after a decline in the price. After a price decline, we can see some consolidation between some small support and resistance. Accumulation occurs after the smart money get invested into. So this is where the smart money invest in accumulation zone. So here the whatever the selling pressure is, all is consumed by buyers. So buyers and sellers came to an equilibrium, which means the market tend to be staying at that place for some time. So after that it tries to break this resistance and it will goes to advancing phase. So this is an advancing phase. So yeah, it can also go down the channel, but yeah, we'll discuss mainly about the stages first. So this is an advancing zone, where here after a particular accumulation zone, the advancing stage occur. Here the buyers dominate. Buyers and traders, everyone get into that. Once it is in advancing zone, people tend to catch the momentum. So traders tend to catch the momentum and also investors try to invest in the advancing zone also. So this is how the advancing zone occurs, and once the advancing zone occurs, again it tends to go back to the consolidation phase, which means it's a distribution phase. Here it is in distribution phase. So here what happens, the buyers and sellers again they get into an equilibrium. The traders will still think the market gonna go up, and some traders will think the market gonna go down, because it already seen a huge gain from the past so many months or years or whatever. So here the market tends to be in equilibrium. Here the distribution phase occurs. In the distribution phase, generally smart money come out. So once the smart money come out, it go back to, this is the distribution phase. Once the smart money come out, it will go down to the declining phase. This is the declining phase. So here again someone must stop it. So trader thinks that it will go down, and some traders think it is already went so much down, so let's start buying it. So there is this phase of equilibrium here after declining phase, and this is nothing but accumulation phase. So this is how the market runs: accumulation, advancing, distribution and declining. Okay, so after this let's discuss the price action. So I think you have understood this, so let's discuss the price action now. What is price action? Price action helps you to basically understand the imbalance between the buyers and sellers. So once there is an imbalance, the price tend to move up or else down. So basically what you think, if there are more buyers, the price will go up. If there are more sellers, the price will go down. So this is not the case actually. If there are some particular number of buyers, there will be some particular number of sellers. Generally the selling pressure would be more than the buying pressure. So how the price action occurs, we'll discuss about in detail here. So for example, the market is at some particular place here. Okay, So it tries to move up, again it tries to come down. So this is the point where if it breaks this, there would be some particular price action. If it takes support here, and there would be some particular price action. So these are the two types. So first one, it took support here, and again it took resistance at the point where it is already taken it initially. So this is, again it took support here. So this is nothing but, these are the resistances, these are the supports. Here we say the market is in consolidation, means the market tends to move at particular support and resistance generally. So what is a positive price action? Positive price action is like when the market, this here the price starts and here it went, it came down, but it still didn't come here, but it moved up and it broke this resistance of first one and it went up, and again it went down. It will take this as a support if it comes down, and again it will move up. So again it break this resistance, it tends to go up. So this is the positive price action that you can say. Sorry. So this is the price action, positive one. Okay. So which means the market tries to form lower highs and higher highs. So price action positive means lower highs and higher highs at every step. Okay. So what is a negative price action? If you think this is a particular price, if the markets go up and it break this support, it's tend to go down, and again if it tries to go up, it will take this as a resistance. The initial support will go back as resistance and it will go down. So here, and again it will try to move up and it will go down. So here what we can see, lower lows and higher lows, sorry, lower highs and lower lows. So this is called the negative price action. Negative price action. So we'll discuss everything in detail with examples, live examples also we can see where the buy point and what is the selling point for these kind of strategies. So we have discussed three: consolidation, positive price action and a negative price action. This is this is the basic how people trade, whether it's buying or selling or whatever it is. Basically this is a price action where we need to keep in mind how the market is getting into, like in different time frames, like 5 minutes, 10 minutes, 15 minutes, 1 hour, or also 1 day. So this is how it runs. So what you understood? So basically whether it takes support or not. So give me one more example. So this, so generally this is a positive price action, so lower lows and higher highs. So negative price action, so this is a negative price action because here every high couldn't beat the next high and every low it is beating. So which means this is a negative price action and it is a positive price action. And it's generally ऐसे नहीं होता है कभी भी, maybe it takes slow movement like this much time, and also it takes slowly. So basically you need to understand the price action, that's it, which means there is some particular point where it cannot break and some particular resistance where it cannot break or can break, depends on the price action you prefer. Okay guys, and we'll go into the details in the live examples. Now let's discuss about price action in detail with the examples. Now let's start with the Nifty first. So this is one point, this is the other resistance, and this is the other resistance. So see, so what is the price action here? Here it started from here, it went down, it didn't reach the previous resistance, but again it broke down the low, again it did reach the previous resistance, it broke down the low that has formed previously, and it went up till here. So here the price action is forming lower highs and lower lows, so which means it is a bearish channel. Now after this it moved up. Because of this, say this, it crossed the resistance here, it crossed the resistance here, now it took the resistance here. So which means once it crossed this resistance, you can assume that the price is going up and the market is a bit of bullish. And again after crossing this, you can think of the bullishness. So here it took the resistance, so again it went down, went up, down. So this is a pattern it formed here. So what you can get out of this, here this is a bearish channel, here it is a bullish channel, but there is no particular action formed here, but it's just like a straight line. And after that it went to again in a bearish channel. See, it didn't form the higher one, lower highs and lower lows it formed. That's it in Nifty. So overall the Nifty is in bearish channel. We can assume this kind of bearish channel. Okay, and let's see Reliance, maybe, yeah, our favorite stock. So this is the one. So see this, I'm opening a bit of a long-term chart. So yeah, so this is the accumulation zone. This is a distribution zone, decline and went up a bit, and it formed a bit of accumulation zone here. It gave a breakout again. Here it got distribution phase, declining phase, bit of accumulation phase, and advancing phase, and also this is a distribution phase, went down and it moved up like this. So here it is an advancing phase. Okay, and if we get back into the channel once, so let's check the channel. Yeah, so this channel is in a bearish trend. See this, went up, down, didn't cross the previous resistance, went down, again it didn't cross the previous resistance, went down, down. So forming lower highs and lower lows. Now it crossed the previous resistance of this, it went high, but it couldn't cross the previous resistance of this, and it came down. Here it took the bit of consolidation, and again it went up and went like this. So this is a Reliance pattern. So what you should get out of this, when to buy and when to sell. So let me give you a small brief on that. So if the market, see, okay, I'll take some other example. Let's take Infosys. Okay, so here the market is in, you can say this is a accumulation zone, advancing zone, and this is a distribution zone. But as we discussed, distribution zone after you can expect a declining phase or an advancing phase. So this is an advancing phase, again there is some distribution phase, declining phase, accumulation zone. So this is what you should understand by the price action. Yeah, and here you can see some declining right now, and maybe this can be the accumulation zone, I can expect. After that it might break down or it can go into advancing zone. Okay, so how do you take trades based on this? So for example, the price action starts from here, it moves up, it didn't come down, it moved up again. So after crossing this, you can buy futures or else buy call option or something like that, keeping the stop loss of this should be your support Else you can give, once it gives a breakout of this, you can take any call position, buy position at the money or in the money call buy positions. I am talking about intraday. So, or else you can keep the stop loss of this also. This could be the genuine stop loss. This can be the stop loss that can be triggered by some big institutions. Okay, so if the market is in downward trend, what will you do? So this is the one. If it goes up, it comes down breaking this point. So once it break this, so you can take the sell call here or else put buy. So the stop loss would be this, the genuine stop loss would be this. Okay, so you can at the money calls, at the money puts, and in the money puts you can directly buy when the price break this point. So this is how the price action works. So let's see if there is no resistance or no support in times of price action. See, for example, if the market is moving up, so there is no other previous resistance that coming from here, so you can actually go for a call positions, buying call positions. If you think there is some resistance here, so you can go for put sell. If you can see the unlimited option which can trigger the momentum which there is no resistance, then you can go for call buy positions, else you can go for put sell positions. Okay, so that's it. And in terms of bearish trends, in terms of consolidation, how you can trade, you can sell calls above this and below this. That's it. In consolidation phase, you may tend to lose money in terms of option buying, because it's very hard to, when it takes the resistance, when it takes the support. As in consolidation, what is the perfect consolidation? We can expect some particular moment between support and resistance, but it will not be exact point where we can see there is a support and resistance. That's what we can say. When there is a consolidation, selling puts and calls above the particular consolidation points would be better, else you can better go for option selling. Okay, that's it guys. So this is a basic price action that you need to learn. So share to your friends, everyone. Thank you.